Good morning, students. Uh, Today again we are going to discuss about the financial management and the financial decision, in which the first decision is investment decision. Yesterday we discussed about the some of the factors which affect the investment decision, and today we have to discuss about the we will discuss about the features of investment decision. Overall, we can say it is an important part of this chapter because there are three decisions which may comes in the board examination, and many times this question came. The first one is investment decision, another one is financing decision, and the third one is dividend decision. We will discuss about the rest of decisions later on. So today, before starting the features of investment decision, we just recall whatever we learned yesterday. We should revise it again. So if we are going to discuss about the financial management, we have to discuss about we must know that financial management related to the collection and distribution. Collection and distribution of fund within the organization, because finance department helps the management to identify that how much fund is required and from where the company will get the fund to perform the different financial activities. That is why financial management is an important term which is utilized by the company to remove all type of financial problems from the company and to create the availability of enough fund to perform the different financial activities. And in which yesterday we discussed about the investment decision, and we also discussed about some of the factors which comes under the investment decision. Like yesterday we discussed about the cash flow position. Cash flow position means inflow and outflow of money from the company, because if more inflow take place, then good investment decision will be there. If more outflow take place, then ultimately no good decision is available over there. So cash flow position is also helps in deciding the investment criteria for the company. Return on investment. Yesterday we also discussed about it, because if more ROI take place, then ultimately the company prefer to take investment decision over there. If less ROI take place, then the company refuse to invest. Risk and other factors. Risk also helps in deciding that whether the business will be profitable for the company or not. If more risk take place, then ultimately the decision will not be good. If less risk take place, then ultimately the investment decision will be good for the company. And several other factors are present, like availability of raw material, availability of finance, availability of transportation, availability of hospitality. So many other factors are also present over there. On the behalf of these, we can take the investment decision over there. So these are the factors which directly or indirectly affect the investment decision, or which also helps the businessman to take the investment decision to start up their business in that particular area. So after that, we come to know about the main topic of today, in which the first feature is long-term effect. Long-term effect means if a businessman is going to start his business or going to take investment decision, then whatever investment he is going to make, it will be for a long period of time, because long-term investment cannot be made by the businessman for a short period of time. For example, if a businessman is going to invest rupees 1 crore to purchase fixed assets for the company, then ultimately he will make the investment for a long period of time, because 1 crore is a big amount and it cannot be invested by the businessman for a short period of time. That is why whenever the businessman is going to take investment decision, it should have the long-term effect over the business activity. High degree of risk. There is a high degree of risk is present, because once the fund is invested, then ultimately if the businessman do not get return from it, it will not be profitable, it will not be fruitful for the company. That is why high degree of risk is present over there, because it requires large amount of fund to be invested, and it is not possible for the businessman to start up a big venture by investing a small amount. That is why high degree of risk is present. Whenever the businessman is going to invest more amount, then ultimately it will carry out the high degree of risk over there. If a person is going to invest less amount, then it carry the less degree of risk over there. That is why we can say under the investment decision, high degree of risk is present. The next one is huge fund. As I told you, in investment decision, the businessman has to decide the proportion between debt and equity. Debt means how much fund the company is going to collect from the outsourcers, and equity means how much fund the company is going to invest from their own pocket, or we can say in which the company has to decide that how much fund will be utilized by the company to fulfill the fixed capital requirement, and how much fund will be utilized by the company to fulfill the working capital requirements of the company. That is why it is an important part which can be used by the company to fulfill all type of financial requirements. The next one is irreversible decision. Investment decision is irreversible decision because once the decision is made, then it is quite impossible for the businessman to make the changes in that particular investment decision. As one person has invested rupees 1 crore for manufacturing of shoes, and after 1 month he comes to know that the project is not profitable, then ultimately it is not possible for him to change his product line, because he already invested a huge amount to start the business. So ultimately we can say investment decision is a reversible decision. Once it is made, then it is quite difficult to make changes over there. The next one is more difficult decision. It is the most difficult decision because in which the businessman has to do many of investigation. He has to collect lot of data before investing the money. Once investing the money, and it is quite difficult for the businessman to analyze the 100% actual conditions from the economy, because sometimes the conditions are different and sometimes the conditions are most different from others. Sometimes the demand of the product will take place in the market, and sometimes the customer shifted towards the other product. That is why it is the most difficult decisions among 3 decisions which comes under the financial decisions. The another one is impact on firm future strength. If the businessman has taken the good investment decision, then only the future strength of money will be created of that particular businessman. That means the businessman will have enough fund to perform the future activities of the business. If the businessman do not have taken the good investment decision, then ultimately he will face a lot of shortage of money in future also. That is why we can say the investment decision is very helpful to create the good decision for company's future also. Impact on cost structure. If the businessman has taken the right investment decision, then ultimately the cost reduction will be there. If there are problems in selecting the good investment decision, then lot of cost related problems will also arise. So students, these are some features of investment decision. Some features may be present in your book, and many of features are not present. So you just look at the whiteboard and take the screenshot of it. Okay. I'm again telling you the meaning of financial management. Financial management related to the collection and distribution of fund from one distribution of fund within the company to perform all type of financial activities in a best possible manner. If company face any type of shortage of fund, then ultimately it is not possible for the company to carry out all the financial activities in a best possible manner, because business finance is considered as a lifeblood for the business. It is helpful to fulfill the fixed capital requirement, as well as it is very helpful to fulfill the working capital requirements of the company, because once the businessman has fulfilled the fixed capital requirement and he is unable to arrange the working capital, then ultimately he cannot run his business successfully in the economy. That is why he has to create the availability of fund to fulfill all type of financial requirements whatever take place in the organization. in which if the businessman has purchased the machinery, if businessman hire the worker, that's mean he has to pay salary and wages to the workers also to make them happy and satisfied, because two organizations can have similar machinery but they do not have the similar manpower to perform all the financial activities in the best possible manner. So it is the primary responsibility of the management to satisfy the worker, whether they are working in the or whether they are giving their full efforts in the organization, whether they are facing some type of problems in performing the work. That is why the financial management perform an important role to create the availability of fund in the organization to fulfill all type of financial needs. So students, if you have any problem related to this session, online session, you may ask your queries on my personal number. I'll send you the notes of this session on your class group, and some of the questions are also there. If you have any problem related to solving the questions, you may ask your queries on my personal number. So it's enough for today. Have a nice day.